Good evening, everyone. Thank you for joining us tonight. On behalf of AACC, we would like to welcome you to our second series of the financial series. Tonight, we will be discussing mortgages and home ownership. I have a great group of women joining us tonight that are gonna give us so much information and are willing to answer any questions you may have. We ask you all to be mindful and just keep your questions under a minute. We'll start off with the panelists. Dila, can you tell us about yourself and what do you do?
Hello. Yep, my name is Dila Yunchai, and I am a mortgage underwriter. I've been a mortgage underwriter for 20 plus years. I am a married mother of two daughters, and I also am a co-creator of Shuchni, American Women's Group. I am a big advocate for women and children issues, as well as I also help my husband with his business, basically on the front end with the paperwork. So I'm pretty busy, especially these days with the mortgage industry. And I look forward to speaking with you guys.
Thank you. Saranda, would you like to go next?
Sure. Hi, ladies. My name is Saranda Pitone. I am a realtor here in New Jersey. I serve North Jersey, Central Jersey, and some areas of South Jersey. I am also a married mother of two. I have two little boys. And I also help my husband with his company as well. He owns a construction company and he flips houses. So in real estate, we do that together. We keep each other busy with that.
Thank you, Saranda. Afrodita, you want to go next?
Hi, guys. My name is Afrodita Muya. I'm a New York realtor. I'm also a mother of three. It seems like we're all moms over here. Basically, I just, I'm doing real estate right now at the moment and raising kids.
Thank you, Afrodita. Viola, welcome.
Hi, everyone. I'm Viola Salaku. I'm a realtor in Connecticut. I've been practicing real estate here for 8 years now and still loving it, still in the business. So I'm deciding to stay for a little longer. I am a mother of one. I have a 7-year-old daughter and she's my mini assistant. I take her to work with me and then she has some fun at work. So.
Thank you, Viola. And last but not least, Amanda.
Hello, good evening, ladies. My name is Amanda Kotelich. I'm from Staten Island. I work for Liberty Mutual Insurance. I am a full insurance consultant focusing on all lines, auto, home, life, pet, jewelry, you name it. My specialty is definitely auto, home, and life insurance, so I'm happy to answer any and all questions. I am married, no kids yet, soon enough. But yeah, most of my time is taken up with work and being with my family.
Thank you, Amanda. And now we will begin. We'll let Dila take the stage and you ladies continue the conversation with the community. If you would like to ask a question, we ask you to ask it in the chat or you could raise your hand. Thank you very much. Dila, take it over.
So I've written everything down because, of course, I'm probably just going to go on, and just so I could avoid that, I actually wrote it down. What I do is I examine your income, your assets, and your credit report to verify you're actually capable of making a payment, a mortgage payment, and purchasing that house that you really love. And the best way to actually go forward in purchasing a home is actually speaking to a mortgage company, which is your loan officer. At that point, they'll be able to kind of set you up of what kind of programs, what kind of rate you're looking at, what the cost is to do your loan. We're really the first level when you go through the mortgage process in home buying. Without us, a realtor, which you'll be hearing from next, you have more buying power. When you go to your realtor, you're going to be, I already got pre-approved and here's my offer and you're ready to go. Really, some key things to remember. Don't open new credit cards. Don't rack up your debt. Don't buy a new car. We all know that everybody tries to do that when they're looking to buy a house, but what really that means is that your credit score could drop. You might not qualify with that additional debt. The best thing to do is hold off on all that stuff until after, if you can avoid it. Of course, things happen where your car breaks down, you need to, whatever. Just talk to your loan officer, make sure that you're going to qualify with that additional debt. And when talking for different types of programs, refinancing or purchasing, you want to, in my opinion, seek out a couple of different loan officers just to kind of compare closing costs, programs. Not every company is going to have the same closing costs. They should have the generic, your underwriting fee, processing fee, and you want to compare those costs. You want to see if they're charging you points. If they're telling you that this is a no cost refinance, odds are that's really incorrect. They are going to bump up your rate to cover that, to give you a concession to cover those closing costs. And if they don't, typically that's just the way it is. They will tell you that it's no cost just to get you in the door. Try to avoid that. Make sure you're looking at the cost. They're always going to disclose it. They have to disclose it. Also, I'm not a fan of being house poor. So really take a look at if you're at 50% of your income and that's your house payment, which you can get approved for in some mortgage loans, you're really kind of setting yourself up to kind of be a little bit stressful situation. You want to make sure that you're below that 50% mark, unless you have additional income coming in from a spouse that's not on the loan, because it does become stressful. You want to be in a situation where that income's not coming in anymore, and then you're going to have to figure out on how to make that payment. That's really about it. I want to thank the American Hoosian community and Shuchni for giving us this opportunity, because honestly, home ownership is a goal for most people. And I think that a lot of Albanian women now are doing it on their own and able to do it. And it's really a great accomplishment.
Thank you. Thank you, Dila. Do you want to take a question now, or because this question pertains to you. It's
Sure.
From Dedi. Dedi, do you want to ask it? Where are you, Dedi?
I don't know what the interest rate is today. You can't ask me that.
Oh, no. No interest rate questions.
I'm not a loan officer.
Interest rate also depends on your credit rating, on your
Yes.
income, and your down payment, and all of that beautiful
100%. Mm-hmm.
Dedi, you want to ask your question?
Okay, so I'm probably going to ask a million questions tonight. You could always ask it for me. My question, Dila, was, do you have someone you could suggest, for example, for us that you've worked with, that you trust?
I'm from Michigan.
Ooh.
So I have Michigan people that I could recommend to you. But as far as New York, I can actually get you some information on that, because I do have people in New York that kind of wheel and deal in the real estate business. And I can look into that for you, and I can get back to you if you would like.
Perfect. Thank you.
It's really important you find someone that you trust. And because, you might be an investor and you want to buy several houses, and you just don't want to, people can put in points and they can put in a lot of different things where it's going to cost you money on the back end, but everything should really be disclosed to you. You're going to see it up front and at the end when you're signing your documents.
Thank you. Who would like to continue next? Saranda?
All right, so should I start with buyers, sellers? Anybody have an area they want me to start in? Or just about the market in general, we can start talking about that. So we'll start there. So the market right now, it's very hot. And one of the things I've noticed is you need patience as a buyer. So a lot of buyers are coming in, they're offering asking price, which unfortunately in this market, you just can't do. You will not get the house. And another issue that I've been seeing with buyers is, like Dila said about being house poor, it's also that it's a very big part of it. But in today's market, another thing you want to be mindful of is you're going to need extra money to be able to put down that bid on the house. Because right now, houses are working like auctions. Listing prices are now the new auction prices, and we're having bidding wars. So you just want to allow yourself enough room to be able to participate in a bidding war. If you sit there and you are looking at homes, let's just say 500,000, and now the home you want is 500,000, you're not going to be able to go any higher than that. So that's one thing buyers need to be mindful of. So what I would suggest is at least give yourself a $30,000 room to negotiate there. Because if you really love the house, you're able to go ahead and put a strong bid on the house. Another thing that I'm seeing is buyers are getting discouraged in today's market because there's not enough inventory. More people, less houses. Demand is insane right now. It's really worth just waiting. A lot of people I've been speaking to, they have the idea that, well, foreclosures are going to start happening soon because now people are going to not be able to pay their mortgage, and now evictions are going to start. So we'll just wait until foreclosures start. And Viola is going to touch base on that after, but it's worth it and it's not, because everyone has the same idea. Now interest rates are going to start creeping up. And once the market starts leveling out, you have to think, would you rather pay more money on interest, or would you rather be paying more money on your principal? So I just wrote down just a little snip of what I saw today. So let's just say you were to buy a $500,000 house. Now at 2.7% versus 3%, in your mind, you're thinking, oh, it's a 0.3%, but you're looking at about a $43,000 difference there. So you're not really saving money by waiting. That's really what sums up what's going on in the buyer's market. It's just, I would really stick in it. We're saying it's a seller's market, but it is still a buyer's market. There's a reason why there's so many buyers out right now trying to find a home. The equity that you'll get in 5-6 years, it really outweighs you just waiting a few years. So you definitely have more to win by purchasing your home right now. Any questions?
There's a lot in the chat. Okay, I'm gonna ask Drita.
Yes.
Why
is it illegal to bid above asking? So in markets, you can bid below, you can bid above. So the list price is just a suggested price of what the seller wants for their home. So there's really no laws against bidding too high or bidding too low. It's really just a negotiation between you and the seller. But in this market, obviously now, if you have 30 offers, automatically the seller is going to go with the strongest and highest. So now, before you used to have room to negotiate, you used to give a price, they used to give you a price back. That's no longer the case. Now a house hits the market today, in 48 hours, we need to have highest and best. You get one shot and that's all you get, which is why I say it's working like an auction now.
Okay, Drita, I hope that answers your question. We have Ramita. She has questions. She also is a real estate agent out in North Carolina. Ramita, if you would like to unmute yourself.
Yes, we'd love for you to.
Hi, guys. Hi, fellow warriors. I'm sorry, I'm in my porch. I guess, for us in North Carolina, the market is the same. It's pretty crazy. And we do see multiple offers. But do you guys ever recommend to your buyers to even wait, even though the interest rate is the lowest historically, they are paying in over asking? Do you guys ever recommend to your buyers to even wait a little bit longer, not to overpay this crazy amounts of that they're paying in offers right now?
I do, when they're stuck on what they want. They know what they want and they don't want to negotiate. This is what we want and that's it. Then yes, I say, you know what, maybe if this is the case, then maybe you should just wait a little longer. And when the market does level out, you'll be able to get what you want for what your pre-approval is for.
Yeah, awesome.
I
So on a crazy twist, as far as the mortgage end goes, when the appraised value doesn't come in on a sale and they've a bid above, they do have to come in with that. The borrower does have to come in with that difference. So they're still stuck on paying even additional in some cases than they were really intending to do.
And that's another thing you need to consider. A lot of buyers, they're waiving inspection contingencies, which means that you will not perform an inspection. You're buying the property as is. And they are waiving a mortgage contingency as well. So when that appraised value does come below what they offered, they have to be ready to have that difference in their pocket.
I got really lucky with when I bought my house because actually appraisal came back less. And so they met, like the seller met us halfway pretty much. So that was just luck.
They did get lucky.
Yeah.
Lady, why investments in New Jersey? I wouldn't particularly say New Jersey. I think it depends what you want. What are you trying to open up? What are your investment goals? And then once you know what your goals are, then you can focus on the area. But I wouldn't specify a location without knowing what your goals were first.
I'm just going to cut in. I think best investments right now are anywhere outside of New York area. Like New York area right now is very expensive, and then everything is overpriced and everybody's bidding over asking. So anything outside of New York, Pennsylvania, Connecticut is the right way to go.
So
I would like to add something before we get off topic and move on to another topic. I would like to recommend not advising your clients to walk away from buying a property right now, even though they're overbidding on it. So here's what people don't understand. And I'm going to get a little bit into the mortgage end of it because the mortgage is related to the real estate aspect of it. So even though buyers are overbidding right now, the interest rates are so low that they're saving money in the course of 30 years with the interest rate. However, when the interest rate goes up, even though the buyers buy low in the beginning, they pay it, through the interest rate in the course of 30 years. So if you look at it from the perspective of, are you saving money? Is this helping you or hurting you? It's not really. Any market is set up in a way where if the property values are high, the interest rates are going to be low. However, when the property values go down, then the interest rates are going to go up. So either way you're looking at it, you're not saving, you're not hurting yourself. The system is developed in a way where it's going to balance itself out. So we need to make sure that we explain this to our clients, because that's what they don't understand. They think they're overpaying now, but they're saving in the long run with the low interest rate. So they're not really losing. For me, the advantage of having a low interest rate is far higher and far better than buying cheap or saving that $50,000 now, but overpaying in the course of 30 years with your loan.
I think Lola has a question, then Anelia, or they might have the same question. So whichever one of you want to ask it.
I think
Yeah.
Lola, yeah.
Sorry. So currently I own a little apartment out here in the Bronx. I didn't realize that the mortgage interest rates are at like historic low. So I would want to know, like, is it worth me going in, doing all that paperwork for 110,000 that's left on the apartment with a 3.75 rate, I think I have currently?
Okay, so for example, I'm going to talk to you like if I'm talking to my parents, because usually I take care of all my parents' mortgage stuff. If it's at least a point lower than what you're paying now, so say you're paying 3.75?
Somewhere around that.
Okay.
Yeah.
If it's 2.75, 100% do it. 100% do it. But do it like, if you want to, is it a 30-year or a 15-year? Say, for example, you're in a 30-year and you want to pay it off quicker. Either you can do a 30-year and pay it twice a month, or you can just do a 15-year, depending on the rate. You'd have to, look at the rate and see if it's even worth it to do even a 15-year. And you can do a 15-year just to lower that amortization. So, but definitely it doesn't hurt to look. I would have one person run credit, whatever company you go to, get that credit score. You know what your bills are. So, you have credit cards. If you have them, what your car payment is. So when you can shop it around with that interest rate and say, hey, I want you to run my credit, but this is what my interest rate is. I have 2 car payments or whatever the case may be. Can you give me what the cost would be to refinance my house for a 30-year and a 15-year. And that's how I would go about doing it.
Thank you.
Awesome. Thank you so much.
Does that answer your question, hopefully?
Yeah, it did actually. I'll be shopping around now in the next couple of weeks.
Sounds good.
Anila, did that answer your question?
Yeah, that was very helpful.
Okay, thank
I'm
you.
gonna consider refinancing. Thanks.
Awesome. Yeah, honestly, this is the busiest. I have been swamped every single night. I work until about 9 or 10 o'clock because these realtors are keeping me busy, selling these homes, and the loan officers are keeping me busy. But this is the best time to do it. The rates are low, 100%. It doesn't hurt to shop your loan that you currently have.
Yeah, we took a jumbo loan. So at that time, I'm in New York City, so it was a fortune. So this has been very helpful, ladies.
Thank you.
For example, I'll give you an example for my house. I bought it 3 years ago. And within 3 years, I had MI, I only put 3.5% down. And I ended up refinancing it just a couple of months ago. And I'm saving $300 a month. And I didn't have, just because I'm working the mortgage industry, there's no special concessions for me besides a waived underwriting fee. But other than that, $300 a month is a lot of money. So definitely 100%, always look into refinancing your house.
Thank you, Dila. Maggie Gruda had a question. I think this is
yeah.
Viola
So, hi ladies, nice to be here with you all. I'm actually in Jacksonville, Florida, and my husband and I own a townhome, but we're looking to purchase a house. And we were looking right now, but the market is similar to what's happening in New York and New Jersey, where there are so many competing offers and sort of overbidding on prices. So I wanted to get your take on where you foresee the market in a year from now.
Okay, so the question was directed at me. Would you like me to answer, Maggie?
Sure, you can go for it.
Okay, so what's going on with COVID and what we're foreseeing in the future is the market is going to calm down. The rush that's going on right now, it's going to come to a stabilization at some point. We don't know when that's going to happen, but it will come to a certain point where people are either tired of running around and tired of overbidding and the wars, and or they're going to run out of money. People are either going to, unfortunately, either lose their jobs further, because we're expecting for some companies and some places to still shut down because a lot of people are still struggling. So what that's going to do is that's going to drive the market into a foreclosure market. And with that said, the property values are going to go down. However, the interest rates are going to go up. Again, it's that balancing of the system. And what's going to happen now, the people who are left over and the people who do have the money to purchase, they're all going to go after these properties, because now these are going to be the properties to get a good deal on. So everybody's going to go after. However, what you need to be careful with these properties is that you have to have a very strong, if you're going to buy with a loan, you have to have a very strong loan terms and the type of loan that you're going after. FHAs are usually not favorable for foreclosures, and there's a few other loans, because there's so many products out there. I'm not going to go into details. The favorite kinds of loans are clean 20 or more % down, conventional. And what's going to happen is the only competitor that you're going to have is cash buyers. And unfortunately, with the flux of the foreclosure that's going to come in, investors are waiting and they're going to attack and they're going to buy these properties cash. So you're going to be you're going to be in a little bit of, again, you're going to find yourself in another sort of competition. So you're not competing with other people, but you're competing with investors, and investors come cash, and cash is usually preferred for these kind of properties. I'm not saying that every property out there that's going to be for sale is going to be a foreclosure, but that's going to be the trend in the next, in the foreseeing next year or so. So get ready, be strong. One thing that banks don't like is a contingency on you selling your current home to buy the new property. Banks don't like contingencies. Banks like offers are clear. The inspections are okay, but they don't like to wait for you to sell something in order to buy something else. Because what happens is that when the market slows down, there's not a lot of buyers out there. That means not only to the bank, but anybody out there, that means there's going to be a handful of buyers going after your property, which means, a very small chance of your property selling in a timely manner. And in order for you to move forward to the other property. So get yourself ready now, get prepared, get that interest rate, your credit score, your credit score up. Get it as strong as you possibly can. Take care of your debt to income ratio. Take care of that because that's very important. And just prepare yourself. So when you're ready to buy, you come in with the strongest application and with the strongest means for purchase in order to beat the other kind of competitor that's going to be out there now.
Wow. Thank you, Viola.
It's actually important also, as far as an aspect of your escrows, just so you guys know, that insurance, we have Amanda, she can explain the insurance part, because if your insurance is high, that can affect your debt to income ratio that Viola was talking about. So I'm not sure if Amanda, do you mind talking about that?
Yes, we wanted to get her involved. Thank you.
Absolutely. Okay, so I basically come in between the middle with the real estate agent and the mortgage broker. So your homeowner's insurance needs to be in force prior to closing, or that will affect the closing date. The bank wants to see that, okay, if this home was to burn down to the ground, when will it be rebuilt and how much will it cost to rebuild the home? Now, with homeowners insurance, it's not a one size fits all. There's many different factors that go into it. Of course, whoever is applying for the insurance, your credit score and your insurance score are a huge factor. So every insurance company will go back 5 years. If you've had any prior claims, they may either deny you coverage or they may raise the premiums a lot more because you're considered more of a risk factor. That's where the insurance score comes into play. Your credit score as well, they want to make sure, okay, will this homeowner be able to pay off their homeowner's insurance every year? The last thing you want is to be lapsed and then have your policy canceled due to non-payment of premiums. Then also to where you're purchasing the home, that's a huge factor as well. The area, the risk factor with that. Many people that purchase homes on the water will be denied coverage too. And this goes back to Hurricane Sandy, because a lot of insurance companies, unfortunately, were not prepared for this. So they use what's called a CAT score. That's basically the loss expectancy if a natural disaster were to happen, and how much the company would need to pay out for that. So with that, there are companies that will write it. Maybe the premium will be higher. So location is a huge factor. And of course, the characteristics of the home. So if you have an all brick house, that's going to cost you a lot more as opposed to a vinyl siding home. Square footage as well. If you have a pool in the backyard, that will affect it too. Some insurance carriers will not write it because that's more of a liability. So we're not insuring the actual land. We're just insuring your dwelling, what it would take to rebuild the home. So I've had many people, when I do send them proposals, will say, well, hey, my loan amount is $800,000, but the homeowner's insurance is covering $500,000. So again, we're covering what is it going to take to rebuild this house. We use external reports that are very, very accurate. And now too, insurance premiums are a bit higher because due to COVID, materials are very hard to come across. Wood, lumber, it's a lot more expensive. So premiums have gone up and people question that a lot. So that's my job to see. I'm able to shop around with other carriers aside from Liberty, because again, for some people, Liberty Mutual may not be the right fit. Another company is, and I'm able to do that for the customer. Another thing too, when purchasing homeowners insurance, is the liability coverage. That's very, very important. You want to make sure, so when I speak to anyone, I want to get to know them. You know, do you have a family? If you have a pool, do you like to entertain in the summertime? Because that sets off triggers that, okay, this person needs, you know, a high liability amount. They need an umbrella policy. Many people don't realize that your liability on your homeowner's insurance, that covers many, many things. So if you do have a nice pool in the backyard, you're entertaining in the summer, one of your kids has their friends over and they slip and fall and crack their head open, the parents can sue you and you're legally liable for that. Your homeowner's insurance kicks in to provide legal defense fees, medical payments that, you know, may be covered for anyone that has to go to the hospital and whatnot. It also too, believe it or not, my company, we actually just paid out recently a young girl. She was 8 years old. She was bashing her math teacher on the internet, saying how much she hates her, and the teacher sued for personal injury, and her homeowner's insurance and her umbrella insurance paid out for that. So it could be something that you would never think of, and that's what we are there for. So there's many different factors to it. That's why I like to really get detailed with all my customers to know exactly on how the home is finished. You know, do you have a finished basement? We want to make sure that we're insuring it for the proper amount. You know, unfortunately, sometimes people aren't honest because they really want to save on their homeowner's premium, but then something happens and they're not insured for the full amount. So there's a lot that goes into it. I like to get very detail oriented with all of my customers. Another thing is to, you know, people like to try their best to save on homeowners insurance. So they'll go with a company that's called a non-admitted carrier. Basically what that means is it's not backed by your state. So like Liberty Mutual, for example, and every company we use are A-rated companies, strong JD Power. Non-admitted means if something were to happen, they technically don't have to pay out that claim if they're not quote unquote financially sound. So that's a huge risk for someone to take on, which I wouldn't recommend. You definitely are paying for peace of mind too by going with an A-rated carrier, knowing if you do put a claim in, that will be paid out. Another thing as well with any of the homeowners insurance. So when it comes to the deductible, I always like to know what everyone's comfort level is. So the deductible is if there was a claim to be put in, that's what you have to pay out before insurance kicks in. I've seen people put in $500 deductibles because their electricity went out and all the food went bad in the fridge. I always recommend $2,500. That's considered the sweet spot. If you're putting in a $500 claim, that will count against you. That stays on your homeowner's history for 5 years. So when it comes time for renewal, they're going to look, okay, the frequency of Mr. and Mrs. policyholder, they're putting in one claim a year. They're either going to jack up your premiums or they will drop you. And that will hurt you for the next remaining years when you shop around with other carriers. They don't want to see that. When it's something major, of course, you put that in, but anything smaller, like $1,000, if the person is able to do it, I recommend that they pay out of pocket so you don't have that staying on you for 5 years, because it could really, really affect you where you're paying way more than you need to be. And that's about it. So, I mean, if anyone has any questions, I'm more than happy to help. Another thing I did want to mention too, as well, we do offer for certain states certain discounts. You know, the higher degrees that you have, like New Jersey and Pennsylvania, that will help with your homeowners as well. We do bundle packages too. So if you do your auto, home, and umbrella, there's a significant savings. And the final thing, I always speak to my customers. I know they're busy with the closing process, but usually a week or two out. When you buy a new home, I mean, you worked very, very hard for it. You put a lot of money down. If you have a family or if you're looking to have a family, you want to make sure that it's protected. So part of my job is to offer mortgage protection through life insurance. you should absolutely be getting at least a 30-year term policy to cover that mortgage, because we all have to be realistic. We don't know what will happen the next day. And you want to make sure that your family still has that option to be in that home. You don't want to make it more difficult for them. So that's how I usually tie everything up. It's a hard conversation to have, but I think people understand, you know, you would never want to put your family in a financial situation where they can no longer live in that home after you just worked so hard to purchase it.
Thank you, Amanda. I think we have two questions. One from Ramita. She asked about title insurance. And then we have another question. I'll unmute the.
Sure. So I don't do title insurance. My company doesn't do it either. That's entirely separate from what we do. I do have a few title
totally different. Totally different.
Yeah.
Can I answer one question though, that I think Dita had a question regarding assets from a foreign country?
I'm sorry, you were breaking up. Say that again.
No, Dita asked a question.
It was Lady.
Yeah.
So you can use foreign assets, but what you have to do is you have to get 60 days worth of those assets, a statement of that or transaction history of that, prove that they're yours. You have to get it translated. Then you have to transfer those funds into a US bank account in order to use them, but you can definitely use them.
Oh, thank you, Dila, for answering that. And I think Drita had a question.
Yeah, just for Amanda, that crazy story about the teacher getting suing or whatever. As a nurse, should I have something with my homeowner's policy that protects me, or is that something totally different?
No, you can. I always recommend an umbrella policy. So an umbrella policy is basically coverage on top of coverage that will extend from your auto and your homeowners. People would be surprised at things they get sued for. You know, some a patient could say, we even cover for libel and slander.
Yeah.
They could, you know, accuse you of something, and that's where your umbrella policy kicks in. If someone has a business that they're running from their home, like for example, my sister, you know, she had a section of her home that was for baking. So you need an umbrella policy. What if somebody says, hey, one of the ingredients made me sick, and they sue you? They can come after you. They can garnish your wages. There's so much that goes into it, and this is where it kicks in, and it's fairly inexpensive. Of course, again, like I said, this will all be based on your insurance score. If a company sees that you have many claims in, you're considered too much of a high risk, they won't take you on. But an umbrella policy, I feel everyone should have, because you just don't know what anyone is capable of. Even if, you know, one of your family members is using something from your neighbors, like a lawnmower, and they damage it, they come after you for that, and they sue you for whatever reason. This is where you're covered the proper way. So my job is to make sure that there's no gaps in coverage. So I do ask questions. What are your assets? You know, how much do you have that we need to secure? Because umbrella policies can go up to $20 million depending on the individual.
What is the typical amount that people will get for the umbrella policy?
I mean, it depends. I just did a few this week ranging from 1 million to 15 million. The $15 million umbrella, this was for an individual that sits on a board and whatnot. And if the board decides to sue him, another one, $4 million, you know, she just entertains a lot. She loves to have people over her home, and her homeowner's liability was $1 million. So she needed at least a good 2 million. That would suffice. Now, if there's changes, I always tell everyone, let me know if you make any changes, you know, any construction to the home. If you add in an addition, if more people are coming over, let's review it to make sure that if something does happen, you're 100% covered. You don't have to worry about if you owe anything, if someone's suing you, that you're liable for that.
Thank you. Thank you, Amanda. Wow. All the things that you could be sued for. Nobody really thinks about these, and it's important to bring this to light. I would like to get Afrodita more involved in the conversation, and then Saranda, Viola, you guys could piggyback. And of course, if you have any more insurance questions or mortgage questions, please raise your hand. It's very important. Afrodita, so in New York right now, like a lot of us homeowners see their home market value going up and everybody's like, oh, I should sell, this is the perfect time. But since inventory is so low, what do you suggest to these people that have homes looking to sell, but they really have nowhere to go?
That's definitely a tough one, especially like with the market. But like I personally recommend, like I have plenty of family who I'm like, sell. It's the time to sell. If you're interested and if you have even the littlest thought of in the near future or now you're definitely like thinking about it, it's definitely the time right now because you will make your profit off of your house or you'll make more than what you bought your house for at this point in time in the market. As far as where to go next, like that's the big question in the air. Everybody's like, well, I'm going to sell. I have plenty of clients who are selling and then renting in the meantime, which I know to some people might sound crazy. It's like, but you're spending all that money in rent, but you're still making like a decent profit off of your sales. So it kind of like helps out. And like Viola was saying earlier, when the market does settle down eventually, then you can, use your profit and buy then eventually. Like that's my advice I give to most of my clients at this point in time.
I don't know about rent.
Yeah.
I know.
I'm on a gold mine here, but
it's
that
tough.
rent is holding me.
Yeah.
It's tough.
It's
I
tough.
was thinking the same thing, Beatty, but the same way how Afrodita's saying, I'm doing the same thing. I'm listing my house in the next few weeks and I'm trying to rent for a year. And a lot of investors are doing this too. A lot of my clients are like, you know what, let's just sell, we'll rent, and we're going to hit the auctions once foreclosure time creeps up on us. And when you think about it, you're like, wait, all that money is going towards rent. And I was thinking the same way. I'm like, I'm not ready, this and that. But when you sit down and you really run the numbers, what you're making off your profit right now on your property versus what you're paying on rent, you're paying your rent and you still have profit left over from what you sold your house as. So you're winning either way. And even
House has doubled.
What was that?
If I sell it now, I will get what I bought it and then some.
Yeah,
that's great.
Definitely.
And then you can take all that profit. Let's say you were to rent for 1 year, see how the market's going. You have all that cash to work with. So your mortgage rate is going to be low if
I keep the cash from not selling, when you sell your house, you have to put in the money, or otherwise you got to pay taxes as a profit.
So if you
want to pay taxes on $400,000, that's a lot of money to pay.
So if you're married, you get taxed on what's over 500,000. If you're single, you'll get taxed what's over 250,000. So it does, your marital status does make a difference when it comes to the tax.
It's still paying $250,000 worth of taxes. It's a lot of taxes to pay.
Yes, but like Remita does, or you can do a 1031. You can invest it right away. You have a certain time period to invest it. So there's ways around it. If you talk to your CPA and say, listen, this is what I'm planning to do. What can I do? I mean, investors do this all the time. And if you're investing in business, you don't. Let me just see.
Regisa's asking more details.
Yeah, I'm
on
gonna
this.
unmute Regisa. Where is she? Sorry, guys, bear with me. I'm kind of.
It's okay. I wanted to also say, since there's a little bit of a whatchamacallit space right here, try to get a home inspection. It's way different than an appraisal. Home inspection, they get into the nitty gritty, electrical, the roof, your everything. They'll get into everything and let you know exactly what's wrong and what's right with your home, so that you're prepared to know what you're going to be spending after you buy it.
Yes, and a lot of people don't like spending the $500-600 that it costs, but some of them don't realize that you'll get a seller's credit for that. Once you get that inspection report, you can negotiate with the seller and say, listen, this is the quote of what it's going to cost me for these repairs. Can you give me a credit for this? So it definitely does pay off in the long run.
And I'll just jump into that really quickly. For the homeowner's insurance, if you have a new roof, guys, that is A+. You get an amazing savings on the new roof, because if they're 15 years or older, some companies will not insure it as well. So new roof, electrical, plumbing, all that just helps you overall.
And I do want to bring up something very quickly on the inspections.
Okay. And then we'll let Regisa ask her question. She's been waiting patiently, but go ahead, Viola. Is it okay, Regisa? And then we'll circle back. Go ahead, Viola.
Okay, very quickly, this is very good advice. I want people to know this because I've had clients who were tricked into this and they were not happy. What happened is that the lender went behind everybody's back and asked the client for their inspection report. So just so you know, your inspection report is yours. You pay the inspector to come in, provide, do the service, provide you the report and the information. That's between you and the realtor to figure out, renegotiate, handle the repairs and whatnot. Your lender should not ask you for a copy of that report. If they do, they're doing it behind everybody's back and they're doing it for ill reasons. And and some lenders are very sneaky, and what that causes is it's going to cause you problems and delays with closing, because the lender now knows what's wrong with the house and they're going to get involved and ask the seller or the buyer to take care of whatever needs to be taken care of in the house in order for you to get the mortgage, and that could kill the deal.
Yeah, but I'm a little bit surprised that a lender would require a home inspection. What would be the point?
There's some sneaky.
I 100% agree with that, but I'm not sure.
The buyers behind everybody's back to provide the report, and especially first-time home buyers who don't know the process, who are not aware that they don't have to provide this document to the lender. They will innocently provide it, and then it causes a lot of problems in the process.
Wow.
So that inspection report, please keep it in mind. That's for you and the realtor and nobody else. Nobody else should have a copy of that.
Good to know. Thank you. Regisa?
Yeah, I would like to go back to a point where, I'm sorry, I don't remember who mentioned it, that if you are purchasing a home, if you're investing, it's not favorable to the bank that you are selling what you have and buying another property, basically. Can someone get into more details with that?
I missed that.
So someone mentioned before that if you're owning a property and you are selling that and purchasing another property, banks don't favor that. They don't like that.
No.
So
But that for, you mean a foreclosure or just a regular old sale?
Having a condition of selling in order to buy.
We don't care. I can tell you that right now. If, for example, the only time we care is if, for example, I just had one yesterday. They were looking to purchase a inferior home as their primary. And we look at that as far as a lending side, is that, are you really buying this property as an investment property instead of a primary? Because if you're going from say for example, a 2,000 square foot home with 4 bedrooms, and you're going into a 1,000 square foot home with 2 bedrooms, and you have 6 family members, for example, underwriting is always going to question that. So that's the only time. Are you really, the intention is not there to actually buy it as a primary residence. Now, for example, if it's the opposite and you are intending to rent out your primary, the 1,000 square foot house, and you 100% can provide a rental agreement, first month's rent with a security deposit to bypass that mortgage and buy that other house, no problems at all, as a primary.
Okay, so I just want to clarify something for Regisa, because she's confusing the banks when I said the banks earlier. So I wasn't talking about the lender banks. I was talking about the banks as the seller for the foreclosures. So they're the ones that don't like that condition, not the lender. Is that a little bit clear?
Yeah. Thank you.
You're welcome.
Okay.
Yeah, when it came to offers as well, that's what you'll always try to say. So when you see an offer and you say, okay, well, it's contingent on them selling their home, what happens if they don't sell their home? Now this sale falls through. So that is an issue that I see a lot with offers as well, that if your offer is contingent on you selling your property before you're purchasing this one, and this market tends to get thrown out quicker than the other offers.
That's my question, actually. Yes. That was so.
Yeah, I realized afterwards we all started explaining. Yes.
Yeah.
That's the issue, which is why they say sell first And then you have that money to go ahead and place an offer with. Just because from a seller standpoint, let's just say you have one offer that's cash, or let's just say a strong offer. Have you always you have that 20% down, you have a strong offer, and then you have another offer where it's a strong offer, but it's contingent on them selling their home. That it's an iffy offer. It's not a solid offer in a seller's eyes.
As far as underwriting,
Right.
if you're buying a nicer home, provide a lease agreement for your current primary, get a security deposit, and from that, whoever's going to rent it out, that's how you bypass it. Don't make it a contingent on your new house. My advice. So, okay.
Yeah, there's ways around everything. If you speak to, let's say, your mortgage underwriter or your realtor, it all depends on the situation.
We find everything in mortgages. We find everything.
Yes.
they try to do everything to get that primary. So
we get really creative when we have to. And so lady asked, what property can you buy under a business? You can buy any investment property under a business, as long as it's registered under an LLC, any two family, as long as you have your primary residence, the second property that you buy can be registered under that LLC.
Actually, I don't know about New York, but in Connecticut, and again, I'm going to speak for Connecticut here because different states have different regulations. In Connecticut, you can buy your first home, your primary home, as an LLC. So there's no restrictions to that. And the reason why people would do it here is just because of that reason that Amanda was talking about earlier, getting the umbrella policy under an LLC. So a lot of people, to protect themselves from a lawsuit and whatnot, they don't go under the route of the umbrella policy. They go under the route of the LLC just because it's a limited company. So they're protected under that LLC for anything that people can go after them, lawsuit or what have you.
Right. I believe Jersey's the same way. As long as your first property can't be an LLC, but then if you have your primary, then you would just register the investment under the LLC. You don't want two properties under your personal name.
Thank you. Lola, do you have anything to add? Ledry's moving to Connecticut, by the way, Viola.
So Ledry was actually just asking in the comments, I was just answering his question. He was asking, would it be easier to either open an LLC or a corporation or S Corp? I just know a little bit more about corporations because I work with a real estate company that we just actually became a corporation, and you just need so much in order to become one. LLC is the easiest way, especially if you're just looking to buy, a little house for yourself or something.
Thank you. Anybody else have something to add or any other questions?
Maybe Afrodita knows the laws for New York between the LLC and Corp.
It's obviously the same thing. Well, not obviously, but it's actually the same thing as Jersey, so to speak.
Okay.
That's why I didn't put
Corporations that require more documentation. It's more complicated. There are more pros than cons to it, depending on your situation. For some people, it's worth it to go with the C Corp, but LLC, it's the easiest way to go. But like I said, there are sometimes more pros to having a corporation. It just depends what you want to do with it.
Okay, Lady has a question. I'm gonna unmute her.
Hey ladies. Okay, so the question is this. I have all three of them. I have the S Corp, C Corp, LLC. I just want to try to see which way I could streamline the money best at to invest it in properties without taking them out of the business. So I'm hearing that LLC is best, and then best to buy out of the LLC more investments.
It's easier. It's not necessarily the best. It's easier. I don't want to give you the wrong answer. I would speak to your accountant about that, but it's easier. I don't think one is better versus another. I would speak to, because I personally have an LLC with my husband, so I don't know a lot about the corporations. A lot of investors I work with, I've noticed that they also have LLCs. So the reasoning behind that, I'm not too sure. Is it just because of the documentation or whatnot? But I mean, you got me interested too. I'll definitely ask my accountant the same question.
Get back to me on that. I'd love to hear more about it.
Well, Ramita has a plan. I'm going to ask her to unmute.
Unmute. Sorry. Well, I was gonna say, I'm sorry if it's dark, guys.
It's all right.
Let me go inside my house. My apologies. So if you guys ever want to invest down south, North Carolina is actually one of the hottest market in the country in terms of investments. We actually just got Apple. They're investing about $1 billion, which is gonna like be crazy for property values. So I'll be happy to talk with any of you. And if you have any other questions, I'm also happy to be a resource as well. But these ladies have done a phenomenal job tonight. So thank you.
Thank you. Thank you so much.
You're welcome.
We tried to cover as much as possible. We went with the tri-state, and then Dila has her, like, she knows mortgages in and out. And Amanda, would you like to add anything else, or anyone? And then I have a fun question for each and one of you.
Don't we all?
Amanda, nothing else to add?
Sorry, you were breaking up. I just heard my name.
It's okay. Do you have anything else to add or any tips?
No, I mean, the only thing I can suggest is, you know, a lot of people, when they buy a home, they look at their homeowner's insurance policy once and they never look at it again. So I tell everyone to do a yearly review. Things change in life. You may need more coverage, and we need to add that on. And another thing too, if you're renting right now and you're looking to buy a home, 100% have renter's insurance, because we still look at that too. So when I'm doing the application, every carrier I use, they always ask, do they have renter's insurance? And that will affect your rate. So you'll get a better rate by just doing that. And renter's insurance is very, very inexpensive. So that will just help you in the long run too.
Thank you. All right. So I would like to ask each and every one of you, Amanda, what made you get into this field, and what would you be doing if you weren't doing what you're currently doing?
Sure. So, I mean, prior to this, I had partnership in a salon for many, many years in Manhattan. I was my own business owner. It was something that I truly enjoyed. And unfortunately, due to COVID, I lost it. And many people said, well, why don't you get into insurance? You know, just from being a business owner, I knew a lot about it. You know, I know how to speak to people. I'm very easygoing. So I said, okay, sure, why not? And I love it. My goal is eventually to either have my own salon again or have my own insurance agency.
Wow.
So
Thank
yes.
you. Very proud of you.
Thank you.
Viola, would you like to answer next?
Yes, so I've been wanting to do real estate ever since I was in high school. I was very interested in the HGTV channel. That's how I got into it. I would sit there and watch these shows for hours. And, but, you know, going through college and everything else, I knew I needed more experience and support and just expand my network, because as you know, when we first moved here, we don't know a lot of people. So you need to build that foundation. You need to build that support system in order for you to be successful at this. So that's what I did. And for me personally, I like to be out and about. I'm not an indoors person. I'm an outdoor person. And I combined my experience for the business world, marketing, sales, and the love that I have for architecture, helping people, as draining and as exhausting as it is as a profession. At the end of the day, I go to bed and I wake up refreshed in the morning. I want to start the day all over again, because I enjoy everything that I love in life is connected to real estate. So that's why I'm here, and that's why I do it.
Beautiful. Thank you. Saranda?
So I was actually in healthcare for quite a while, for 12 years. And I had my first baby, went back, had a very hard time adjusting to my 9 to 5. And go over there, sorry. Honey, sorry about that.
That's fine. We all understand. A lot of us are mothers.
Yeah, well, everyone is a person.
Oh,
I had a very hard transition going back after him. Yes. And then I had my second baby, and it was a lot of time out of my day. I was no longer happy being, just like Viola said, I was so used to being outdoors and I'm sorry. Aphrodite, would you like to take over while I take him downstairs and answer? Yes. Then I'll finish my answer.
Okay, so
sorry, guys.
Basically, I was just a housewife the Albanian traditional housewife for many, many years. And then one day I woke up and said, like, I need more. I need to be doing more. This can't be my everyday routine anymore. So I was looking at a couple of different fields, and then real estate just clicked with me. And I was like, this is what I'd like to do. I'd like to help people get into their homes. Like, that's a big part of somebody's life, getting into your first home or second, third, whatever home. So that's why I chose it. And so far it's been good to me. And I'd like to keep it going.
Wow, we're proud of you, especially, branching out from your typical housewife, like realizing you could do more and doing more.
It's hard. It was really hard because I was always so used to this, like, okay, I have to take care of the husband, the kids, the in-laws, the this, the that. And then I'm like, no, I need to stop. I need to stop and just focus on what I want to do. And thankfully I did. Yeah.
I'm proud of you. All right, Saranda, you're back and you can finish.
So I went back to work. I was out of the house 14 to 16 hours a day with my commute and everything. I was missing a lot of time from the family. And real estate was always on the back burner. It was always something that I told myself, I want to get licensed. I will one day. And I finished college. Like I said, my husband was flipping houses. And I'm like, why are we paying real estate agents for this? If this is something that I can do and I love doing, and I'm helping you anyways, I'm your right-hand man, I might as well get licensed. So I did. And I gave it a 9 to 5 for like an 8 a.m. to 11 p.m. job. And you're constantly working, but I love it. I love it that I could stay home. I could do my own hours. And eventually I'm thinking I want to open my own brokerage. So I'm really enjoying it. It was a big change, but it was a good change.
Wow, thank you. And Dila, last but not least.
So I actually fell into this type of work. I was 20 years old. I was pregnant, newly divorced. And I had to figure out what I was going to do with my life. I was a receptionist at a mortgage company, and I learned the ropes. So I started off as a receptionist. Within a year, I became a processor. Then I became a senior processor. Then I became an underwriter, and that's where I'm at right now. And I wouldn't trade it for anything. I guess I was meant to be in this position, and I've been able to raise my family. And I'm proud of where I've gotten myself, relatively on my own. But definitely recommend it. It's stressful, but every single file is a piece of the puzzle, and you just have to figure it out. And you're like a little FBI agent for mortgages. And definitely recommend this type of work really for anybody. Right now, I'm working from home remotely with my job, and I love it. So.
Wow, thank you. And see, like tonight we have 5 very successful young ladies that, came from different backgrounds, and, they show that you can make a career out of this. To anyone out there willing to look further into it, and I'm pretty sure they'll help you. We went a little over an hour, so I think if anybody else has any questions, if not, we would like to wrap it up. I feel like, these ladies gave their time, and we really appreciate them, and we would like to be mindful for their time. Any last questions?
No, any questions you ever have, I speak for all of us. I would assume that just feel free to reach out to us anytime, and we'd love to help you. Even if you just have a simple question, let us know. And if you ever want a career in real estate or insurance or mortgage, any questions, we're always here for you.
Yeah. We're definitely hiring in mortgages. So if you have any kind of experience, let me know.
We're still hiring for insurance too. So.
I'm actually very interested myself in getting into mortgages. So if there is some link, maybe you can send me, or I don't know, I guess direct me. I am in New York, and that's something I want to do part-time.
Oh, excellent. Maybe you guys could link up, Dila, or any of you.
Yeah, I think I'll put our emails in the chat box. This way anyone who has any questions, they could just.
I was just going to suggest that, to drop your emails in the chat box, and then.
Yes, we'll also see tag them on their Instagram pages through our AACC Instagram account.
I also recommending to send all the information to Suada, and then she could disperse in our AACC account.
Yes, and thank you to all our organizers for organizing this.
Thank you, guys. We're so glad that there's members in our community that want to achieve the same goal as we do, which is educating the community. If you guys have any ideas for the next one, please feel free to message
Suggestions.
us. Any suggestions? We're here to help.
Thank you. We appreciate it.
Thank you all for coming.
Thank you.
Have a great
Ariana, any last words,
Night, guys.
babies?
Everybody just have a great night and enjoy
Yes.
the rest of the week.
Yes. Thank you, guys. Have a great
Good night, guys. Be
Good
well.
night, guys.
Bye.
Weekend ahead. Take care.
Thank you.